What if everybody can't get paid via direct deposit and all the customers leave in a 24-hour period? What are we going to do then? We're looking at bank collapsing. And they pretty much got it.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Welcome to Wrestling Payments. I'm so excited. One of my favorite people in the world is on the call with us. Bill, do you want to introduce yourself?
Absolutely, Joe. Thank you so much for having me back. This is an honor to be able to speak to your members and those that subscribe to Wrestling Payments. My name is Bill Sullivan. I lead the government and industry relations for Nacha and advocating for the ACH network. It's not quite as exciting as it sounds. A lot of it is strictly just industry relations and working with the other trade groups and explaining what we're doing in the rules process, encouraging them to participate, and then if something goes through, making sure that our team educates them. But there is a fair amount of Capitol Hill and regulatory work that goes along with that. And I am a registered lobbyist, but I really rarely lobby. I usually just kind of advocate and share the news that we were up 5% in payments this year with one less processing day and things like that, and some of the cool things that the membership and the network have done to try to mitigate risk. And I'm kind of the mouthpiece, but really it's the 70 people behind me at Nacha that really do all the work. So I tell people I've got the easiest job in payments, but we're not going to share that outside of this podcast today. But it's absolutely the easiest job in payments. And because we're speaking with niche members today mostly, and I'm dog tired from running around all day, this is absolutely sponsored by Dunkin'. So Dunkin' is driving this webcast today because I just went before this and got a giant iced tea.
Excellent. I will give you the inside scoop. The law, Congress was a mystery until Nacha ran one of their Capitol Hill days. And I got to see Bill in action. And it really is just sharing information. He's not out there pounding the desk and demanding changes in Congress. It really is, hey, this is how the ACH works. This is how different things affect what you're talking about right now. It's really good, and Bill always gives us some insights. So with that, I got to go on another one of those. Something keeps overlapping, so I keep missing it. What is the hottest thing on your topic today?
Okay, there are a lot of hot things going on right now. I think the one that I'll lead with is a regulatory action, because we heard something yesterday that was a complete about-face from what we were told in mid-December, and that's 1033, the open access to data. Just 2 days ago, in front of a group of about 100, I reported out that CFPB originally was going to do what they call an interim final rule. And really what an interim final rule is, hey, this is our final rule until we can think of a way to make it better. And they were going to issue that before Christmas. But then in a lawsuit about whether or not CFPB could just decline funding and almost try to put themselves out of business, there was a stay that they couldn't put anything out. And then on December 30th, a judge ruled that CFPB is not legally allowed to decline their funding. Therefore, they had to continue to be staffed up and to work. And I shouldn't say work. They were going to always work, but it was going to be a skeleton staff. And the Government Relations Advisory Group, a group, Joe, that you know well, that you participated in, and actually several members of Niche participate in. We had Jeff Gradler, who was on our call in December, who's the deputy director of CFPB. And I really, truly believe, because of some issues with the current directors, also the head of OMB, that Mr. Gradler, Jeff, will eventually become the director sometime this year. So he's sitting as deputy director now, I think, with the idea that he'll take the reins probably by the fall. But Jeff had mentioned that if the lawsuit ruled against them and they had funding and staff, that instead of going with an interim final rule, they might pivot and go out with a whole new notice of proposed rulemaking. So basically taking what happened under Chopra and the Biden administration and just starting all over again, which is fine because that's within their legal limits of Dodd-Frank. So where we got is we're waiting for this notice of proposed rulemaking. Now, Jeff's he's a smart dude, And he didn't ever promise what was going to be in there, but he hearkened on two things that I thought were key. One, he said that he felt that there should be some form of payment for turning over this data, but they didn't necessarily want to set a going rate. They were going to just encourage the two parties, the requesting party and the party providing the data, to work something out. And I think that would be very favorable to financial institutions and something the financial institutions were looking for. He also kind of hearkened or kept pounding on the fact that with the data moving, all the security that is responsible for said data moves along with it. Because that was another big concern that financial institutions had, is how do we know our customer data will be safe? So those were the two things he really kind of harped on. And I'm sure there's other things, but he continually brought those up in the discussion. So I reported out 2 days ago what I've just said, only to find out last night that the new hot rumor in Washington is that they have done a complete about-face, they being CFPB and the administration, and they will basically say there will be no fee for turning over data. Now, none of this is substantiated. I mean, the White House is very tight-lipped on a lot of these things, and often there are rumors out there that just come out of nowhere. But it seems to have a little bit of traction because a gentleman that owns a group that really kind of set up open banking in Europe has been quoted as saying that, and there's a GR firm that I believe represents his company that has also been kind of whispering that in the halls of Congress. Now, maybe they're doing that as a smokescreen to try to get CFPB to do so, but it's really going to be disheartening to financial institutions if this proposed rulemaking comes out and there's no avenue to collect a fee for having to produce data to a third party when requested. So that is kind of the hot off the press. I don't quite know what to make of it yet. I have calls in, but I doubt I'm going to find anything out. I reached out to a career staffer at CFPB that was not let go when they laid off most of their workforce. And I've not reached out to Jeff yet because I just don't know whether he's going to tell me, and I don't want to kind of mess a good relationship up because he's already agreed to come back and talk with GRAG, the Government Relations Advisory Group, on several more occasions this year and into next year. So we got to stay tuned on that, but I do believe that notice of proposed rulemaking will be out within the next couple weeks. So for those of you interested in 1033, something is coming, but it's going to be starting over from scratch. In all likelihood, it'll be a notice of proposed rulemaking. Nacha will absolutely comment on it. I'm sure all the banks will. And if all the banks and credit unions are in lockstep on answers, they might even go in together and collectively submit one comment letter that's very kind of generic and really at a high level, and then each one of them will submit their own individual comment level that dives deeper into their members' issues. And if they do, depending on what the letter says, Nacha might sign off on it as well, because often we join all the credit union and banking trades on their letters. So that's kind of the hot off the press, because all this stuff I found out yesterday and it kind of blew me away.
I'm probably doing this out of order, but to recap the full picture from an amateur's perspective, Dodd-Frank came out over a decade ago, had a provision that included open banking. UK had PSD2, which really opened that up a decade ago, already doing open banking. After 2020-ish, CFPB actually got down to writing a rule. They got to the end of that process, and then the election changed things, and they said, we're not going to do that. But let's put something else out again and see how that's going. I imagine that ended up being the interim final rule, but now we're at just a new phase of that, correct?
Exactly, because the interim final rule was actually never issued because they had to let this funding order stay, and then they just kind of buried it. Yeah, and what it was is the Biden rule came out within, and I never quite remember this, I think it's within 90 days of an election, any rule that comes out, 90 congressional working days, so that goes back to like August, of an election, the new Congress coming in and the new president can, if they all agree, can do the Congressional Review Act, which basically strips that regulation from being enacted or promulgated. And in this case, that's what happened with 1033, because the Republican administration and the Republican leaders in the House and Senate wanted to take a fresh look at it. So that's where we're at. I might as well go ahead and say it. And I again, have no idea whether there's any validity to this or not. Part of that rumor, too, was that President Trump is currently suing JP Morgan over some debanking stuff. And I know we're going to touch on debanking here in a minute or two. And he knew this is a pet project of banks the size of JP Morgan and things along those lines, meaning making sure that they're reimbursed for the data. And that's been attributed to some of this. I have no idea if that's true or not. And I even hesitate to say it, but we do know that sometimes where there's smoke, there's fire. And it may not be about JP Morgan. It may just be that they've decided they don't want to charge fees for whatever reason, whether it's large donors have gotten to them or there's some very sensible reason that Jeff Gradler didn't mention in a call in mid-December.
Super interesting. And one more comment before we move on. You mentioned Jeff. I think you alluded to him as a really smart guy. One of the observations from the Capitol Hill day, whether I don't know what your politics are, but the staffers of these politicians are smart. They're super smart. It's impressively smart how these people, you ask them a question and they just go and explain all the nuances, all the interrelations. There are a lot of smart people in Washington, including Bill.
I don't know. Actually, I don't know about that. But and on the last Capitol Hill day, we actually did a little something different where we started the day meeting with folks at Treasury because the president had just put out the executive order to eliminate checks. And they were happy to meet with us. And by folks at Treasury, I mean political appointees. So some really big wigs in a really big fancy conference room where you had to go through layers of security to get in and talk with them. But they met with our whole group, and it was a very productive meeting. And those guys were sharp as a tack, but they absolutely love the feedback of people that actually are on the operations side of ACH, representing members or large financial institutions or credit unions. And it was a great experience for the members that attended Capitol Hill Day to start the day off at Treasury.
Excellent. That's awesome. I'm definitely going to get to this year's one. It's great. One of the things we talked about earlier is you wanted to kind of touch on the Clarity Act and where the status of that is.
Yeah, I know we get a lot of questions about Clarity, even from our own internal staff at Nacha. As I think folks probably on the call are aware, the Genius Act passed in July that allowed kind of the pathway for stablecoins. And I am no stablecoin expert by any stretch. Joe could run circles around me on it. But the politics of that act and then leading to Clarity are this. The crypto industry really supported Trump hard in the election and supported him with gobs of money. So this was sort of the olive branch to the industry saying, you all supported me, I'm going to support you, this will be a priority. So after, it takes a while when a new administration comes in to get things done. So it missed its mark by a couple months getting passed, but it was a pet project of the president, a lot of pressure on the Republican Party to get something passed. They worked with the Democrats, they banged out the Genius Bill, and part of the Genius Bill, though, was how is the regulatory structure going to be set up? And they couldn't come to a full agreement then, so instead of having two pieces of legislation passed simultaneously, they passed Genius so Donald Trump could go back to the folks that supported him so heavily and kind of tip his cap saying, hey, we've done the first part of this, now we've got to work on the regulatory stuff. And originally, all the press around it was, the regulatory stuff, just 2 months or so, it'll fall into place. Well, it hasn't fallen into place yet. And the big sticking point right now is the crypto world supporting Clarity wants to be able to have interest and rewards attached to those stablecoin accounts and payments. And the banking world absolutely opposes it. And even on the Republican side, there's a little bit of disagreement on which direction they should go. So it's not only a Republican-Democrat thing, it's a small faction of the Republican Party pushing back on some things as well. Tim Scott, who is the chairman of the Senate Banking Committee, has really done a good job trying to hammer something out, but also hammering something out not in the press. When it appeared as if there was going to be a draft bill that, again, they kept under wraps. I even heard that the lawyers representing the different congressional offices and anybody voting on it in the Senate Banking Committee, you had to come into a room in the Senate Banking Committee and you couldn't leave with the document. You could review the document. You had to leave your phone and your camera outside of the room, and you could review the document so nobody could get their hands on it before it went to get marked up. But this is Washington, and people find out everything. And when word got out right before, I think it was January 15th was the markup date, but whatever, mid-January. Right before all that went down, the reward stuff came out, and there was some language in the bill that was concerning. So the ABA and the Community Bankers of America put together an amazingly quick reaction grassroots campaign to contact everybody on the Senate Banking Committee and express their anger towards this and their frustrations. And then the CEO of Coinbase, who was heavily in favor of the rewards and interest, he pulled his support from the bill the night before. The banks pulled all their support the night before. And Senator Scott, Chairman Scott of the Senate Banking Committee, had to cancel the markup. And that markup originally was intended to, okay, we've talked quietly, we've negotiated, this is what we're going to do, and we're going to vote for it in committee. And usually if something gets voted favorably in committee, the Senate votes for it because they're like, hey, the experts are on the committee, they feel this is a good bill, we're going to vote for it. Now, it wouldn't have been the same as the House version anyway, so they still would have had to go back to the House and negotiate some fine points, but they had to pull the markup. And there's a lot of things going on right now. For those watching later, today is January 30th, and we're staring at a government shutdown. Now, albeit I think they're going to get it resolved over the weekend or so, but that's taking priority. There's a housing bill that's taking priority now. So it's losing some of its momentum because of other things on the legislative calendar that have been put on hold to get this done, and it's not getting done. So the administration's getting very frustrated. They're putting a lot of pressure on the Republicans to do whatever it takes to get something done. And I've even been told that the president not only has shown frustration with the financial institutions that he's met with, CEOs mostly, but also with the crypto industry saying, you know, you're getting something, you can't get everything, work it out. And that's very common for a president to try to get involved on something that's close to the finish line but not there. I was not at the clearinghouse big conference in the fourth quarter. What I understand is that former House Financial Services Committee chairman, oh my God, from North Carolina, and I just pulled a blank. But anyway, he retired, and Congressman McHenry retired, didn't run for re-election, so he's no longer in the House, so he's not the chairman of the House Financial Services Committee. He's a fintech crypto whiz. I mean, he was by far the smartest member on the Hill on this. I guess he had a keynote address or an address of some sort at TCH, and he actually said, hey, I don't see this getting done until around Easter. And it looks like he's right. Even though the whole industry was saying, oh, no, this will be done, you know, if not before Christmas, it'll be done shortly, you know, into the new year, this is going to be a done deal. Well, it's not. And the FIs and the crypto world are arguing in the halls of Congress almost as badly as it was with credit card interest rates and everything between the banks and the retailers years ago. And if you ever walked into a meeting on the Hill, the staff would say, oh, thank God, I'll be happy to meet with you. I just don't want to hear anything more about credit cards. You know, if you're talking ACH, let's talk for hours so I don't have to talk about credit cards. But we're kind of getting to that boiling point now. So I do think something will get resolved because, again, this is a major project for the White House. But we're not as close as people think right now. So we'll see what happens after some of these other more important bills at the moment take shape. And then the only other thing to keep in mind is Tim Scott he's first of all, he's super well regarded within the Republican Party. He was the nominee for president this last time, and you know, Trump eventually took the nomination and became president. But he is the chairman of the group that is raising the money for Senate Republicans' reelection campaign for the midterms coming up in November. So it's a highly coveted, very respected job. It's usually a stepping stone to being really, really well regarded in your party. And they asked him to do it this year. So think about this for a minute. This whole stablecoin thing is Trump's pet project. They've got one more bill to set up the regulatory structure, largely giving it to the Commodities Future Trading Commission to oversee. And he's then negotiating with Democrats on the Senate Banking Committee, and those Democrats are going like, why are we going to hand you a victory that you can raise money off of for all your Senate colleagues to run against our Democrat colleagues when we want control of the Senate because we're tired of being pushed around by the Republican Party? Mm-hmm. So the closer we get to that reelection, the harder it's going to be for Scott to get anyone to sit down at the table and talk. So I actually think what McHenry said about Easter was spot on, because by about mid-June, late June, really Congress stops and it just gets straight into, we got to worry about the midterms. And this midterm is so contentious just because of the faction of the country and the people and the Democratic Party that just do not like the president and the direction the country's going in. So they really want to win the House and the Senate so they can stop a lot of these actions. So Scott's really got his hands full right now. And I'm sure he probably rused the day that he agreed to take over all the Senate fundraising for all these candidates that are running for re-election come November.
So super interesting. I did write down Easter right before you said it just now. Again, my take on this. The Genius Act came in very contained, right? They're working on the structure of it now. States are going to regulate, or maybe the Fed. But it's very, who can issue it? How is it going to be used? Very structured. The crypto world with this Clarity Act, the crypto world, traditional banking, I understand, right? I understand how it works. I understand what, fractional banking and where all the incentives are. Crypto developed alongside it. It developed its own loans, staking, ways to make money, all of that. Trying to bring those together seems monumental, which going to be a lot of growing pains, I think. Going to be interesting to see how it works out. But I guess we'll wait till Easter for an update on any of that.
Absolutely. And, the one thing, too, and Joe, you may remember the name of it. I think, didn't Facebook try to launch some sort of payment application or something?
Was it Lira or? Yes, they tried to add their own currency.
Yeah. And there was a hearing on the Hill. And the thing that was fascinating to me, and again, getting back to your crypto and traditional banking and the ways they kind of develop things, and in the hearing, in the Facebook world and the tech world, you do things and you see what sticks, and if something screws up, you start all over again, you reprogram it, you keep going. Well, that's the way they were kind of handling this whole, Facebook money platform or whatever exactly it was. And it came across in a hearing like the poor guy was just so unorganized and such an idiot, but it really wasn't the case at all. This was a guy that was totally used to trying and failing and trying and failing and then succeeding and then building off of that. And it was just a different way of doing things. But these senators didn't understand that. And it was cringeworthy in the hearing, but it really shouldn't have been, because it was just their way of doing things.
Mm-hmm. It's fascinating. Anyway, I always think of you in that case, not because they're clueless, but because you're the educating. You're doing the background. Hey, here's the handout saying here's the issues with that topic. So I do think of you when they ask the questions like, was my router connected to the internet? And it's like, yes, your router's connected to the internet. Different hearing, but I get it.
Well, this is becoming Joe and Bill Coffee Hour. If I can tell one more story.
Sure.
When Dodd-Frank came about, I actually went to Nacha and said, hey, look, I do have a background in government relations. I think we need to create a department. I think the ACH is missing out on a lot of advocacy and things. And at the time, the CEO said, go for it. Create it. Do what you have to do. And it was wonderful that they had that kind of a blind trust. And when I did it, again, we do a lot of advocacy, and a lot of it is just like kind of collateral pieces that you leave behind about the growth and the success of the network, what we're doing to mitigate fraud, mom and apple pie, the American flag, the whole bit. Well, shortly after my first whole big series of Hill meetings introducing staff to Nacha and who we are and what we do, we had a little collateral piece with some facts on it. I was watching a hearing, and I don't even remember what congressman, but it was sort of here, and getting ready to ask a question, holds a piece of paper out and says, well, the ACH network, which processes some gazillion billions of payments for X trillions of dollars, how do you think this fits into blah, blah, blah? And he was reading our collateral piece. And it literally, for me, I wanted to run up and down the hallways at Nacha going we're legitimate, because I had no idea. Now, since then, here's another inside baseball trick. we, not often, but occasionally we get calls from staffers that know us well, and they'll be like, hey, this is the hearing. Can you write us a couple questions? You're the expert on this. Write us some. So occasionally now we'll do it where we're writing our own questions, but I know those in advance because I was asked by the staffer. In this case, somebody had handed their boss this collateral piece, and it was in a folder, and they decided to run with it, and it was so cool for me. And that was a good
loved it.
15 years ago probably, but.
Yeah, but I still remember. I mean, I was more active with that. McHenry was in, and we met with someone from Maine, and you were talking about return rates. Yeah.
Bruce Poliquin. There's a lot of paper mills in Maine, and when I was trying to get Bruce to understand the significance of same-day ACH before we came about and got it approved by the Fed, we were already talking about it in Congress. Sort of as just a way to kind of a subtle pressure point that Congress is supporting this and we need the Fed to support this and kind of getting it off the ground. And I had my CEO at the time, Jan S., step with me. And I don't like taking CEOs to Capitol Hill because if they're not doing it on a daily basis, they can get tripped up and things. And I turned to Jan and just said, Jan, I got the closing. And I just turned to Bruce and said, okay, Bruce, it's Friday of Labor Day weekend. And at that point, I think we were meeting a couple days before the Friday of Labor Day weekend. The big payroll for the lumberyard, it collapses. Something doesn't go through, and they find out late in the day that, oh my God, nobody's getting paid. This 3-day weekend's coming up. I said, that's where same-day ACH comes in. He patted my CEO on the back and said, this is brilliant. I love this, and sent us on our way. So instead of all of this great conversation about, oh, this is what the network can do, and these are the hours, and blah, 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 it was just that simple example of payroll with his constituents on a 3-day weekend, and he sent us on our way.
Yeah, that's what I think of you. I always think of that.
Bruce was great, yeah.
Yeah, that's awesome. So again, we talked about things before. This one was really interesting to me because it was, how do you interpret the idea of debanking or not banking? And you had some insights around that.
Yeah, here's the problem with debanking. The Republican Party under the Biden administration felt that they were being kind of made an example of, were being set aside, and a lot of them were losing bank accounts for a variety of reasons. Now, banks have their reasons for debanking somebody. I don't think anybody can tell them who they should or shouldn't bank. I also don't know that there really were that many examples of it. I think it's one of those things that just kind of caught fire and brewed up. But that was a big deal during the campaign. And even on Inauguration Day, the president mentioned it. And immediately, Congress wants to act, what are the priorities of the incoming administration? So there was a rush to introduce bills on things that he had mentioned either on the campaign trail or in his inauguration address or just the days after the inauguration. And there was a 2019 bill that got dusted off and introduced in the House and Senate on debanking. The bill never, ever saw the light of day, and it was poorly written, and it actually had a clause in there that if you were found to illegally debank somebody, your institution can be denied Federal Reserve services to the ACH network. So we find out about that, and needless to say, there was a lot of running around in the office and a lot of scurrying because the bill never went anywhere in 19. We didn't even know about the bill. Quickly got on the Hill, quickly got in front of House Financial Services, got in front of some influential members of Senate Banking Committee. They all assured us, oh my God, no, we're sorry. No, yeah, we just introduced the bill to have a placeholder. But you still always want to make sure. And a lot of it was, the point we would make is, well, if you're going to deny him access to Fed, does that include FedWire? Does that include processing checks? What about FedNow? They are trying to grow FedNow, and you're denying access. And then all you have to do is say, and is this going to be a Silicon Valley Bank situation? What if everybody can't get paid via direct deposit and all the customers leave in a 24-hour period? What are we going to do then? We're looking at bank collapsing. And they pretty much got it. And even though the Senate bill still sits out there somewhere, no one's acting on it. This is also where we are really, really fortunate because when Congressman McHenry retired, and again, he was kind of the fintech guru, supportive of the things we do, but really was more of a fintechy guy. the new House Financial Services Committee chairman is French Hill, Representative Hill from Arkansas. I would say of the 535 elected members in Congress, 100 senators, 435 congressmen and women, French Hill understands the ACH network as good as or better than anybody else, and he's also the biggest cheerleader of the ACH network. So having French run the House Financial Services Committee, where that is the one thing, because again, ACH isn't sexy. I'm not, we don't have a PAC. We're not donating money to candidates.
Oh, no.
But that is the office that I can call anybody in that office and almost get an immediate return call. So Hill's staff was like, yeah, this is never going anywhere. Don't worry about it. We got you. Don't worry about it. But even a little story about Congressman Hill was he actually wrote a letter. Well, he wrote the letter before the NSS expansion rule came out a couple of years ago from the Fed. At the time, just urging the Fed to act, and that the ACH network, particularly same-day ACH, was very important to the economy and to everybody it serves, whether it's the government, whether it's corporates, or whether it's the citizens. And a really nice kind of positive ACH letter. Right about the time they were going to send it to Chairman Powell, the rulemaking came out. But instead of just burying the letter like usually happens, they actually redrafted it to thank Chairman Powell for doing this, but also to encouraging them to seek ways to make sure that the ACH network continues to be able to thrive in this environment because of the ubiquity of the network and the rules around it that are governed by the private sector, Nacha, but they also are very consumer friendly. Now, here's the great thing about Chairman Hill. Normally a Republican from Arkansas isn't necessarily going to be best friends to consumer groups. When they were starting this letter, he reached out to me, well, he being his staff, and said, can you give me the connections of some of your consumer groups you deal with? I want to call them and talk to them about how important this is to them. And he actually reached out to consumer groups, had them read the letter to make sure it read well. And even if you remember, especially during the last administration, Republicans and Democrats weren't talking at all. And even the House and Senate weren't talking very much. He actually got signatures from Democrat senators, Republican senators, and Democrat members of the House on this letter to Powell. So if that isn't just a huge friend of the ACH network, I don't know who is.
Yeah,
but
awesome.
On this debanking thing, so where we're at now is, no, they're not going to take away ACH. And quite honestly, I think they realize they really can't make somebody not debank someone. But then the wild card came out about a week or two ago that the president is suing JP Morgan because he feels that his corporation was unfairly debanked. And I can't remember the dollar amount, but it's some dollar amount that even Powerball isn't going to pay out most times. It's a huge dollar amount.
It's a starting point.
Yeah. And I have no idea where that's going to go. A lot of people think that court case will drag on into the 2030s. I'm not a lawyer, but that's just made it even more contentious. And I don't really think a debanking bill is ever going to get by because I just don't know what they can put in the bill that would have any teeth at all on something like this. But it is something we're watching for because we didn't even know about that 2019 bill. And I don't even remember who told me when it came out because there's always a slew of stuff when there's a new administration in there. And we're just trying to figure out how to get back on our feet and who we have to call and who we can deal with. And somebody called me one day and I was like, you're kidding me. And then they emailed the letter to me, sent the letter to me in a PDF, the bill. And I was like, oh my God. And we freaked out. But debanking isn't really going anywhere right now. I think also that they know that Congress, the White House, the powers that be. So there have been a couple of kind of guidance documents from OCC and FDIC, and there was an executive order from the president that, again, didn't have a lot of teeth to it on debanking. But I'm not really sure if this is going anywhere. But at least we know if it does go somewhere, the ACH is not going to be included in it. Because if that was and it went through, I don't think I'd be talking to you today. I'd be unemployed.
Yeah. I think it's fascinating. I saw a hearing around it, had a bunch of crypto guys up there implying that it's tough for them to have access to services. I always thought it would be an after the fact thing because, maybe it's naivety, but they do get banking. So I figured it'd be a lawsuit saying, you didn't give us banking. It really disrupted our business. I didn't think of it as a law saying you must bank any company that comes to you with an account. It's like, whoa.
Yeah. And I think it gets back to the whole point when you're saying too, how crypto is a totally different world. And the banking world probably doesn't fully understand the risk model there or things like that. And again, we're getting into operations now, and that's like, whew. But I think there's a lot of truth to the point you made earlier about not understanding it. But a lot of these things they're ventures. Some of them are set up to fail or to be bought out or, hey, I came up with this idea. It's really not all that great. But then Joe's going to take my idea and make it a whole lot better. And I get it where banks don't want to get tied up in that stuff.
Yeah. We've gone as far in the office here as saying, well, if you do an analysis and the risk says, no, you shouldn't be banking them. How do you say, yeah, we'll bank them?
Right.
That's how far we get.
Yeah.
Excellent. Really interesting topic. Oh, my secret topic that I think I said that the wrong way, but I keep hearing that, and I think it was Trump said, maybe we'll look at not deregulating, but changing how cannabis is identified as a drug.
Yeah, there is talk that, and ironically, the Biden administration had done this, but again, it came out within a certain number of days of the new election, so they stopped it, to reschedule cannabis from I believe it's a class 1 narcotic to a class 3 narcotic. And it doesn't really add any benefit to the banking industry. What it does allow, though, is cannabis businesses can now easier get loans. They can easier take tax breaks, and a couple things that might actually grow the business and take a little less pressure off the business. It also, obviously, if you're caught with it, you're not, going to spend 50 years in jail and wherever. But a lot of it, I think, has to do more with how it would help the cannabis corporates out and those, that run dispensaries. In terms of cannabis banking legislation, it really hasn't seen the light of day yet in this administration, and there are a couple reasons why. House Speaker Johnson is adamantly opposed to any cannabis banking, and Senate Leader Thune is also not a big fan of cannabis banking. So what's happened is you have the leader of the House and the leader of the Senate that don't really ever want to see a vote on this. So it then trickles down, and it's not a priority for French Hill in the House Financial Services Committee or Tim Scott in the Senate Banking Committee. So if it's not a priority for them, the bill hasn't necessarily been resurrected. It had a lot of bipartisan support, particularly in the House. It's just not going anywhere. And if it does, and say somehow it gets introduced, it gets the support, it passes out of committee, it won't see a vote on the floor of the Senate or the House. So I can't even tell you where the president stands on this because it's never really come up because under Thune and Johnson, it's not going to happen. Okay. So maybe if the midterms shift bluer and the House and Senate are controlled by Democrats, they might be able to get something through and then force the president to either accept it, which would kind of be a Democrat win if it was their House and their Senate that got it through, or fight it and risk some alienation there. But particularly in an election year, cannabis banking has always been seen as a Democrat thing. I don't think the Republicans would even touch it, even if they wanted to, before midterms, because they don't want to hand the Democrats a victory.
Oh, yeah, that whole victory thing, that's right. From an apolitical view, we've talked for many years about the guidances around it, if it's official guidance or not guidance. Do you know, and you may not know, so I can just, Mary in our office is an expert. Is it still true that some of these cannabis dispensaries, and we have those in Massachusetts, they're making their tax payment with cash, literally having to take cash to the city hall and say, here?
That is what I understand. I was fortunate enough years ago on a PA event that had multi PAs, and it was a really impressive group. It was like 2/3 of a day of cannabis banking stuff. And originally I was supposed to be the number 2 speaker. The keynote was the treasurer from the state of Washington, and he got hooked up or had trouble with the Zoom call. It was during COVID. So they flopped me, and I went first until he was ready to go, and then I just introduced him to make it look like that's how it was always planned. But he talked about they're receiving tax payments in cash. robberies that have happened on the way to pay said tax payments or any business tax, and some of the problems around that. So I think that's a real problem. And I also, again, can't begin to even explain it, but the banking across state lines, if you have a kid that mows your lawn at your bank and you pay him, but you've got a cannabis customer, in a state that doesn't allow that, if you pay him, is that the money you're paying him with, and things like that. Right. And it's so murky. Now, I don't think this administration's prosecuting anybody, but they did get rid of the Cole memoranda that the Obama administration had that basically said we won't prosecute you, and they haven't done it. But I think they're basically abiding by the Cole memo, but they don't want anything with Obama's name on it.
Exactly.
So they got rid of it. So that's where we stand with cannabis.
Interesting. I'm always interested in it's that cash part. It's the inability to actually use the services that everyone can use. Direct deposit, cards, and I know there's some spots out there. There are card providers that interact, but just the idea of showing up with boxes of cash that smell like marijuana, which is weird, right? So interesting in our modern world. I think that was all the real hard topics, but any other things going on, regulatory changes?
Yeah, there are a couple of regulatory matters, and these can be real quick hits, so it won't take a lot of time. And also, I don't know, the folks that are going to go back and listen to this podcast, watch this podcast, I don't know how much attention they pay to requests for information, notices of proposed rulemaking, whatever. So I'll go through quickly. The one that really got the industry kind of jazzed up was a request for information that came out of the Fed last spring, and it had a very long comment period. In other words, they knew this is a robust topic, and we really want you to take your time and submit comments. Comments were due in September, and that was ways to reduce fraud, payment fraud. And all the trades got together and put letters in. Nacha put a letter in. A lot of our members wrote letters. It's crickets from the Fed on what they're doing with all those letters. Now, I know they got a lot. I know there's a lot of detail, and they got to go through them. I will tell you, we've got a meeting coming up with Fed board payment staff, I think in like 3 or 4 weeks. I'm going to ask them then, like, hey, what's going on with this? I was fortunate enough today to my CEO, myself, and Mike Hurd, who oversees the network administration part of the ACH, for the first time ever met with Governor Waller this morning. And I didn't ask him because we had other topics and we only had a half hour, and it was right at the half hour when I unmuted my microphone and I was going to ask him, because even if he didn't have an answer, I figured he'd put a bug in somebody's ear like, hey, Nacha's asking about this, what's going on? So I didn't get a chance to ask him. I might mention it in a thank you note that I usually send a day or two after we meet with somebody. So that one I don't know anything about, but that's, I think, going to be critical to the industry, especially if the Fed responds and said, these are the things we're seeing and we think are really, really effective, because that's almost kind of information sharing without information sharing. So we've got that. The other one, and this is out now, and the comment period is due, I believe, in very early March, and that is the Fed very strategically is looking at what are the future of checks? Where are we going with checks? Checks are very costly. The Fed doesn't price them according to their cost. The number's dwindling, but it hasn't gone away. They really, really want to try to come up with an industry plan so it's not enacted by Congress. So somebody doesn't say, oh, we're going to put a bill out there to eliminate checks in 5 years. They'd rather have the industry kind of work with them to come up with what the solution is. Now, it's still a ways away for the comment period, so I don't know what my colleagues in the banking trades are saying yet, but I know we're going to take a very measured approach, because, of course, you would normally think the ACH is going to say, yeah, get rid of them, kill them all, blah, blah, blah. But we understand there are consumers out there that still rely on checks. In some banks, it's still a bit of a profit center for them. I think, and we've not drafted our letter yet, I would think that we may just say, Federal Reserve, you should at least price for the true cost of processing that check. The pricing needs to be in line with the effort and work it takes to protect that check from fraud and to process that check. I know that some of the other trades, I think, are probably going to say something similar. I don't think anybody's ready to say, yeah, 10 years from today, we get rid of them. But I think that's kind of going to be the underlying theme, that, yes, we need to continue to do what we can to eliminate the check, but just let it die a natural death. There are other one that's coming out that was the conversation with Governor Waller today and some of his staff is these payment accounts, or skinny accounts as they're called. And that comment period is due very soon. I think it might even be next Friday. And it's not crystal clear. They're trying to create these payment accounts. And even though now, this is not the governor, this is Bill Sullivan speaking here. I think it might be a result of the Custodia case. And even though that case was ruled in favor of the Fed, maybe they were like, hey, we've got a lot of actors out there that want to get involved in this space. Maybe we should put something out that we can control, that we know we can do, and see what happens. And it's basically accessing Fed payment services with the proper risk mitigation that goes along with it, but it doesn't allow for any service that doesn't do daylight overdraft. So they're not giving credit to any of these companies or anything along those lines. And the one thing Governor Waller did say that surprised me was he said he didn't think this was going to be a big boon to FedNow. He thought it was going to be a big boon to FedWire, because what they want to do is settle all this crypto stuff multinationally, as quickly as humanly possible. So he, at least when he talked with us, he shared that he just thought that FedWire was the real reason that there's so much interest in something like this. It wasn't FedNow. Because of the daylight overdraft stuff, Fed ACH isn't even an option. So we'll see what happens. And we are going to file a comment letter, understanding that really ACH is not going to be part of their plans. And I was pleased to hear that actually a lot of fintechs want ACH too to be part of it. But it just doesn't make sense in this particular model because there's not the credit option with the availability of Fed credit in a situation like that. So I personally think FedNow will see a big uptick. He doesn't, and he's the governor or a governor, and I'm not. So I'm going to go with him. But this will be one to see. And I think we're going to get some quick action on this because I think they realize we don't want to go through another custodial lawsuit. And we don't want some of these states that are a little bit maverick when it comes to the cryptocurrency regulations to jump on something. So they're going to try to get out in front of this quickly. So the comment period ends, I believe, next Friday or a week from Monday, somewhere around there. And I would think the Fed is going to act very quickly on something like this, like the skinny accounts.
Let me comment and tell me, please, if on track or completely off track. The fraud one, I really have no comment on. We've done this exercise several times, and it needs something breakthrough to solve this problem because, I've seen a little bit. We need a group to get together and talk about. We have groups to get together and talk about fraud. So I'd love to see if something breakthrough comes out of that. The check, really fascinating. Again, I told you before, but I'll say it for the audience. I thought I was listening to a Saturday Night Live skit because, Check 21 made the image of the check replacement to be a valid check as well as the original check. So we see a lot of digital transactions that are checks that, it's a check, it becomes an image, it goes back to being a check. It makes all sense. Fed went from, 22 operating centers to 1 or 2. But when you listen in, I think I'd love for you to confirm or deny this. I've heard that the government is doing a really good job at getting rid of checks just because they said we're getting rid of checks. But from the Saturday Night Live perspective, I was in a meeting with another payment association, and they said, oh, yeah, we have Amish people that need the checks. And I thought they were kidding. They were not kidding. The Amish don't have mobile phones. They need checks. So it was very interesting that there is a need, but I would agree the cost of the operation is probably not being borne. And I'll give you the final piece before I go on. I'm glad you said it. The skinny accounts, in my mind, I go right to the crypto, and I'm glad you actually connected those together. I did not know that connection for the settlement part, but it's sort of the same question. And again, it's that battle of traditional banking. You're now bringing maybe a non-bank into the fold. At the same time, you say, would Amazon be able to support an account at the Fed? They probably would be able to afford an account at the Fed. So it's all very interesting. Am I off track on any of that or any commentary?
No, you're not at all. Now, I will pick up on when you're talking about the government being very effective at eliminating checks. They are. They're going to a lot of effort to do what they can. And just the other day, the IRS put out kind of guidelines for this tax season. They talked about, really pushing direct deposit, direct payment. If they get paid, no, hold on. If they still will accept a check, if they have a refund that doesn't provide the ACH number, and I guess somehow in this year's reporting, you're kind of going to be forced to put in a routing number and a bank account. If that isn't done and they have to pay, they are going to send the recipient who's getting a refund a letter that said, please fill out your routing number and account number and send it back to us. You will be paid by direct deposit immediately. If they do not get that, they are holding the check for up to 6 weeks before mailing a check. So they're trying to disincentivize people by like, well, you might have filed on February 1st, but you're not going to get paid until St. Patrick's Day or something. Mm-hmm. And that was real interesting. It was kind of buried in a slew of great information that they put out. The other thing is, I've noticed that the Bureau of Fiscal Services, which is really the payables and receivables unit for the federal government, they're doing all sorts of cute little like Facebook stuff on get paid by ACH, don't pay by check and everything. And when I scroll and I come across those, I always smile and usually try to share them with the few people that are my friends on Facebook and look at that. But they are doing a good job. I know the other day, and I didn't even know Customs and Border Enforcement issued refunds. I'm not even sure for what, but they announced an interim final rule. And again, going back to, well, it's a final rule until we can come up with something better to say. They're putting out an interim final rule that takes effect on February 6th that says all their refunds will be paid out electronically. They are no longer paying a check. And I suspect those are more to corporates and governments and things like that have the ability to receive electronic transaction, but you have to be able to receive it electronically. They will not pay it out via check. And I don't think that's going to be a blip on the ACH radar, but that's the type of things that agencies are starting to do.
Mm-hmm. And the benefit of being old, one of the stories is the adoption of ACH by the federal government was one of the reasons it got some feet and grew from the beginning. When the government says, we're not doing checks anymore, and interesting, again, being related to Nacha, being part of Nacha? I don't know what the right phrase is, but being associated with Nacha, you hear about payment news in other geographies. Europe, the EU, makes mandates. Boom, mandates. We don't really do mandates. So by raising the cost of check processing, that may be a way to make the market say, that's not attractive anymore. Exactly. We don't really do mandates. Interesting.
Exactly. And two things on that real quick. One, when you were talking about the kind of growth of ACH and everything coming along, and the federal government is the largest user, I asked at the time, the gentleman whose name was Walt Henderson, and his whole job was to get people off of checks to electronic payments for Social Security benefits. And I said, Walt, you're doing great. The numbers go up every year. How are you going to get across the finish line? And again, Walt was the sweetest, nicest guy in the world. He was not trying to be a smartass. He basically said, we have to wait for them to die. But now Social Security benefits are like 99% direct deposit. So, and he really kind of was right. So that's interesting. The other one, when you were talking about the mandates, I was fortunate enough years ago to be in a very quick, short meeting with like the head of payments in the UK. He was coming into DC for a series of meetings in Washington, but I think he kind of wanted to sightsee. So he came in on a Friday and used, I'm going to meet with Nacha and talk about the ACH as a thing to then kick off his weekend with his wife being able to sightsee and do all the things that you would if you're coming from Europe to DC. And we had a chance to sit down and talk with him a little bit. And he said, we don't understand banking lobbying in our country because we just tell them what to do. And the banks don't spend their money fighting us or trying to get us to change our mind. They spend the money enacting what we tell them to do. And it's actually, that one was like, well, that might put me out of a job, but darn, it does make a lot of sense. You think about all the money that goes into K Street lobbying and all the bankers and all the fintechs that are running up and down the aisles of Congress or, in and out of, different agencies and departments. If that money all went away, think about all the good use it could be put towards.
Mm-hmm. For open banking.
I mean, I wouldn't be talking to you today, but maybe that's not a bad thing either,
No, it's great. It's always great. Are you kidding me? Excellent. Well, thank you for joining me today. I can't wait till the next meeting we have, whether it's a conference or another podcast. I will keep my feelers out to see if Easter, maybe we can try to tentatively plan for Easter, just in case that Clarity Act passes.
Yeah,
thank you very much.
Clarity will hatch on Easter, according to Congressman McHenry.
There we go. Excellent. Ooh, that might be my lead-in to the episode. Awesome.
Okay. Joe, thank you so much. And thanks to everybody at Nacha for continuing to support Nacha, the ACH network, and particularly what I do. You guys are the best.
Excellent. You too. You are. No, you are. All right. Thank you very much.
Thanks, Joe. Have a great one.
On behalf of Nacha, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of Nacha.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.